a simple but effective way to use the RSI for day trading. The Relative Strength Index, the RSI, is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock, future, or crypto. The RSI is displayed as an oscillator and can have a rating from 0 to 100. Traditional interpretation and usage of the RSI are that values of 70 or above indicate that a security is becoming overbought or overvalued and may be primed for a trend reversal or corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. In today's episode, I'm going to be using an E-mini S&P 500 3-minute chart. And it's important to know, in addition to using the RSI, I'm going to be using my anchored VWAP and my 3-minute opening range. I discussed that here in one of my recent videos. Now, a quick recap of what I'm using here on this chart. First thing I do is I draw a horizontal line on the opening 3-minute high and low using regular trading hours only. So at the 9:30 Eastern or the 8:30 a.m. Central time, that first 3-minute bar, I draw those horizontal lines and then I anchor an order flow VWAP to that opening 3-minute bar. Now, in my latest video, I talked about if the anchored VWAP stays between that opening 3-minute high and low, that indicates to me that we are going to be a range-bound day, a very sideways action day. This is the time that I like to use the RSI. As I explained in my intro, the RSI is a momentum indicator. 70 or above is overbought, as you can see here with that horizontal line I have drawn, or 30 or below is oversold. Now, I only like to use the RSI in my day trading as a mean reversion indicator. And it can be used in two different ways. It can be used as an entry or an exit. So really all I'm looking for when I know that the day is going to potentially be a range-bound day, I look for overbought or oversold conditions, for shorts or longs, entries or exits to revert back to that anchored VWAP. Now the first example I want to show you is really the very basic one. We opened up, I had my lines drawn, we get up to plus 70, the market gets overbought, and you see a quick move back down to the anchored VWAP. That's a very simple way to use the RSI. But my favorite way to use it is once that high or low is established with a plus 70 or greater or a 30 or greater using the RSI, I like to look to see what we do if we make a new high or a new low when that overbought was triggered. So for example, on this particular day, we pretty much had a double top here and we had the RSI plus 70 where we had that high and we reverted back inside that opening 3-minute range and just chopped around the VWAP. Now we go up later in the day and make a higher high. And you come here and you see when we make this high, the RSI gets to the plus 70, but it doesn't get higher than the previous RSI. But the market made a higher high. That is my favorite look for looking for a mean reversion trade back to the anchored VWAP inside this 3-minute opening range. And it can be used in two different types of ways. It could be used as a short to come back here. So you're short here with really a very tight stop that you're looking for a mean reversion trade back. Or if you happen to be long because we got back above the anchored VWAP or above that opening 3-minute range high, maybe you use that only as an exit. Either way, to me, when I see that divergence, higher high, lower RSI, but yet the RSI still gets to overbought, that is one of my favorite trade setups using the RSI for day trading. In my first example, I showed you an effective way to use the RSI in a range-bound type day. Now I'm going to show you how not to use the RSI in a trend up or a trend down day. Here we are back at an E-mini S&P 500 3-minute chart. Same indicators. I have the horizontal lines on the opening 3-minute bar of the regular trading hours with that anchored VWAP. Now, as I explained in my previous video, which you could watch right here, when the VWAP is above the opening 3-minute high, that is a trend up signal to me. So on this particular day, the market opened up, rallied, that VWAP stayed above the opening 3-minute high, and the market grinded higher the entire day. Now, right here at this point, when that VWAP gets above that opening 3-minute high and it stays above it, right away I am saying, do not use the RSI today. Why? Because the signal you're going to get is going to be an overbought signal on a day trade, when you know it's going to be a trend up day. This is a mistake I see a lot of traders make, is they use momentum indicators for mean reversion trades in a day where the market is set to be a trend up day. Let me show you an example of where I think most traders go wrong. You see the RSI here sitting well above the overbought 70 number for an extended period of time. And a lot of traders will look at this and say this is an indication for overbought and look for the market to revert back to the mean. But the entire time as it stays above 70, you are continually losing money, and eventually you get that retest of that anchored VWAP. But so what? By that time, you're already churned out and your day could potentially be done because you've lost too much money. Now you go back later in the day and you see the market gets back above overbought conditions again, over the plus 70. And here we are late in the day, and what does the market do? It doesn't revert back at all. Because it's late in the day, it goes up and it makes an even higher high. Because a lot of shorts are probably trapped looking for that mean reversion, but it doesn't happen because why? We are in a trend up day. It's important to identify what tools work on what specific environments. I like using tools like the RSI only in range days because the market, if it gets overbought, it reverts back to the mean. If it gets oversold, it reverts back to the mean. But if it's in a trend up day, or if you flip this and it's a trend down day, an oversold or overbought condition just isn't effective. Each and every week here on Develop Your Edge, you see me use the NinjaTrader platform for my charts. Well, for the month of June, NinjaTrader's offering $100 off a lifetime license. To learn more, go to ninjatrader.com. I put out this tweet the other day. It's easy to get fixated on what we think the market is going to do. That fixation creates our hidden bias and subconsciously dictates our trading. In order to exist through changing market environments, you have to let your hidden biases go, or the market will keep taking from you. To tie in to today's discussion, look at that trend up day. If a lot of you traders are using the RSI or a momentum indicator, and subconsciously you've really been bearish because the market has been in a bear market for a majority of this year, then in your mind, you might be continually taking those RSI signals, hoping for the market to pull back. But yet, from the beginning of the day, it's set up like a trend up day. And you keep forcing it because why? Your hidden bias is in control of your decision making. You're bearish on a bullish day and you're looking for bearish indications for a reversion back to the mean, but it never comes and you just get chopped up or lose money on the day. It is so important to come in each and every day, identify what type of trading environment that day will be and accept it for what it is and let go of your hidden biases. Traders, I want to hear from you. Do you use the RSI? Let me know with a yes or no down below in the comments. Never miss an episode of Develop Your Edge. Click that subscribe button right there. You can also DM me on Twitter. My DMs are open at Anthony Crudele. And don't forget to check out Instagram, and I'm now on TikTok at Anthony C. Crudele. That's a wrap for today. See you next week.